Hello, everyone. I'm I-Rav, and you are tuned in to the 611 episode of our Here and Now podcast. Today, we bring you the latest buzz from the insurance industry, so let's dive right in. Our first story today is from ZBIS, reporting on significant moves by the Insurance Regulatory Development Authority of India, or IRDAI. The authority is drafting new rules for the insurance ombudsman, and these are not just minor tweaks. The goal is to overhaul the dispute resolution system, making it faster, more efficient, and more decisive in favor of consumers. The ombudsman is the official body you turn to when you have a grievance against your insurer that has not been resolved, and these new rules aim to give this body some real teeth. So, what's the game changer here? The new rules are expected to introduce a strict timeline for insurers to comply with the awards passed by the Ombudsman, but the most impactful part is the consequence for not following through. If an insurer fails to implement the Ombudsman's decision within the stipulated period, they could face a hefty penalty of up to rupees 20 lakh. This is a substantial financial deterrent that sends a clear message to insurance companies. Customer grievances must be taken seriously and resolved promptly. This move is designed to prevent long-drawn disputes and ensure that policyholders get the justice they are entitled to without unnecessary delays, strengthening the entire redressal mechanism and building greater trust in the insurance ecosystem. Next up, a story from the Hans India highlights the importance of loan protection insurance. Whenever you take a significant loan, be it for a home, a car, or personal needs, the debt does not just disappear. Loan protection insurance, often called the credit shield, is designed to cover your outstanding loan amount in unforeseen circumstances like the borrower's death, critical illness, or disability. This crucial coverage prevents the financial burden from falling on your family. Think of it as a guardian for your goals. It ensures that the dream house you bought for your family remains theirs, even if you are not around to repay the loan. By settling the outstanding debt, this insurance protects your loved ones from the stress of potential foreclosure or the liability of a loan they did not take. It is a responsible financial planning tool that secures not just your assets, but your family's future and peace of mind. Moving on to a story from Mint, which highlights that term insurance, long considered a product primarily for metropolitan dwellers, is now witnessing a remarkable surge in uptake across Tier 2 and Tier 3 cities. This trend is largely fueled by two powerful forces: the rise of digital advisors and the profound impact of the COVID-19 pandemic. Online platforms have demystified insurance, offering easy comparisons and expert guidance at the fingertips of consumers in smaller towns, while the pandemic served as a stark wake-up call, universally highlighting the critical need for a robust financial safety net. This movement is further accelerated by a streamlined purchasing process, with insurers enabling digital KYC and offering policies without mandatory medical tests for certain coverage, thus removing historical barriers. The trend also reflects the growing economic prowess and financial literacy in these cities, where rising incomes are translating into more proactive financial planning. Ultimately, this signifies a crucial evolution in consumer mindset. People are increasingly embracing term insurance for its true purpose: pure, affordable protection for their loved ones, moving beyond the traditional view of insurance as merely an investment or a tax-saving instrument. It's a powerful story of empowerment and awareness sweeping across the nation. And for our final story today from Business Standard, Zoomcar, in partnership with Universal Sompo General Insurance, has introduced a new trip protection feature. This offering is backed by a contractual liability policy and is designed to make your rental experience completely stress-free. It protects you, the customer, from financial liability for any accidental damage to the vehicle during your trip. This feature removes the fear of high damage costs. With trip protection, the financial risk associated with accidental damage is mitigated, making the entire process more transparent and user-friendly. And with that, we conclude today's episode. We hope you found these news updates helpful and insightful. As always, our podcast, Here and Now, will continue to bring you more such insurance updates. Until then, take care, goodbye, and have a great week ahead.